Enrique, Bain Capital, you've been there, since 2014. You were leading Symantec, which eventually, of course, was bought by Broadcom and has changed its name. But as a leader and now as an investor, how much has the game sort of been reorientated towards artificial intelligence for 2023?
Yeah, if you look at the opportunities right now, we're definitely seeing that, generative AI specifically, which is really the thing that is driving a lot of meaningful change. If you take a look at what it's going to disrupt, think about how software is being written. Today, software developers have to sit down and write each line of code. In the future and near term, we expect that probably 40% of what a developer has done can be handled through AI. And we think that's not a fad. That is a meaningful change. And that's just one example of what we think is going to be really meaningful as we take advantage of this new major trend.
And speaking about, disruption and AI, talk to us a bit about what you think the disruption could mean when it comes to phishing and hacking and cybersecurity. What influence does what we're seeing in AI now mean for that universe?
Well, the thing that's going on is using new generative AI technologies, what an attacker can do is be significantly more targeted. So what does that mean? They can quickly generate an email message, a phishing attack, that will be very specific to you, to what you do, things they know about you that before they wouldn't have been able to do as effectively. And so what does that mean? That means it's more likely that somebody will respond. And if they respond, now the attacker is inside the network. And so we just think that the sophistication from the attacker's perspective will significantly increase.
And you spoke about the opportunity set with AI. How do you look at the risks? You just mentioned one. Are there certain areas of AI and venture or later stage investing that you're avoiding given some of the concerns that we're seeing right now?
Well, when you look at the total landscape, there's always things that you want to be careful in. And, one of the areas that a lot of us have thought about, and you just had a discussion on what's happening with what we'll call centralized finance. We're big believers in decentralized finance, and we think that is going to be a big opportunity going forward. But I would say broadly, we're bullish on what's happening in AI. We're bullish on what's happening in cyber.
Decentralized finance. What areas? I mean, are you still running checks when it's related to crypto?
Yeah, so we raised a fund last year, and so we continue to invest in the companies that are working on new blockchain technologies. And so we've got investments in companies like Scroll, Celestia, and we think there's still real opportunity ahead. The question really is, there's cycles, and we saw some of the excesses of 21. We think we're in a much healthier environment now. This is more normal, and we shouldn't lose sight of that.
Even for AI startups, even for valuations there?
I think you're seeing that the best founders have moved into what's happening in the generative AI space, and so what that begins to do is they can command premium valuations. And so definitely we're seeing some overheated prices, but we think that's driven by what the opportunity set is, which we think is incredible. We've made an investment, for example, in a company called Unstructured. And if you think about what they do, is they're taking all your corporate data and allowing you to train a model on your own specific data. And so we think companies like Unstructured, companies like Contextual, which are solving real problems around hallucination. Because one of the problems with generative AI that I think we've all experienced is that sometimes you'll ask a question or you'll ask for some information and it'll give you some amount of randomness. And what companies like Contextual that we've invested in are really trying to do is eliminate that hallucination.
Speaking about valuations, how do you see the runway ahead when it comes to the number of down rounds that we might see over the next 12 months, whether in AI or even more broadly looking at infrastructure?
Yeah. So if you look at the current environment, 2023 is probably not an ideal time to fundraise. Most of the founders that we engage with are really focused on thinking about raising in 2024 and 2025, where we expect that their revenues will have grown into the valuations. But there will probably be some companies that will be in a position where they have to raise financing at a lower valuation than last time.